Most investors haven't been able to access corporate bonds for individual companies until now. But why would you want to? To talk about this, I'm joined by Richard Murphy from the Australian Corporate Bond Company. Richard, surely if I want to be able to smooth out the returns I get with an investment, I can just buy an index fund of bonds.
Problem is though, is that most of those are tracking indices that are very heavily invested in government bonds. We had a look at our 17 XTBs, and if you compare the returns on the 17 XTBs with the returns you get in the index versus a government bond curve, you get much greater returns, 88 basis points outperformance for the XTBs versus 10, 15 versus a lot of the ETFs, and that's on an after fee basis.
But you do charge a slightly higher fee though than some of these index funds, right?
We do charge
about
a
40
higher fee than some and less than others. So some of the managed funds have got much higher fees than ours, and some of the ETFs have got lower fees. But if you look at the after fee returns, that's the more relevant number to look at. Our set of individuals, if you invested in all of them, actually rank better than the ETFs that we've looked at.
Sure, and just to be clear, you're not actually buying individual corporate bonds, are you?
No, you're not. You're buying a unit in a trust, and within that trust has got the individual bond. So the 17 separate securities on the exchange, and you can pick Woolworths, BHP, Telstra, Lendlease, etc.
So, I mean, some of these bonds are rather expensive at the moment, well north of 100, and
Indeed.
I suppose that's one disadvantage compared to term deposits. If you're trying to pursue a timed strategy, if you've got a schedule or a ladder you're trying to build of investments.
Well, you're not really thinking per se about the price. You're thinking, well, what is my yield on this investment to maturity? And if it's 3.5% for a Lendlease bond, you're comparing that, notwithstanding that the bond you're saying is $100 par value and it's $108. You're not investing for a capital return, you're investing for the yield. You say, I want to get 3.5% because I'm willing to take the slightly higher risk of Lendlease bonds than the term deposit that's giving me 2.2% to 2.05%.